Good morning, everybody, and a warm welcome today. It's fantastic to see so many of you. Thank you so much for taking the time out of your days. I know it's an incredibly busy time of the year, and we hope that today is of significant value to you and your businesses. We've got a packed agenda lined up today with some brilliant voices. We'll kick off with Hendrik de Tooy, our founder and CEO, and he'll be in conversation with Bronwyn Nelson. And they'll talk to the trends Hendrik's seeing globally, a little bit about politics, and a little bit, hopefully, about 91 and 91's future. We'll then have Clyde Rousseau, our head of quality, and he'll look to what the markets hold for us, his outlook, his positioning, and his views. And then a man who needs no introduction from me, why you've all come to join us this morning, Jeremy Gardner, who will close us off today, and he'll share his sharp perspective as always. We turned 35 this year, and we're named after the year that we started in, and it holds a lot of meaning for us. 1991 was a pivotal year globally. It was a turning point in history. You saw the end of the Cold War and the fall of the Soviet Union. Back home, you saw the apartheid began to be dismantled, and you saw the World Wide Web go live. I don't think many of us today could imagine a world without the internet. And that's the world we were born into. And we've navigated the change over the last 35 years, not by clinging to the past, but by adapting with discipline and some judgment too. We were built for change then, and we still are today. And the timing of taking stock is very appropriate, because it was about 2 weeks ago, on the 1st of February 1991, that a young 28-year-old analyst from Old Mutual walked through the doors of Investec with 2 desks and about 200 million rand to manage. And up there, a picture between the 2 dashing young gentlemen on the top, who will be on the stage later, is the site, the original building that our current building in Cape Town is on. It used to be a power station. Today, we're back in our new building, a green building, where we hope when you're in Cape Town, please do come visit us. Hendrik states that those early years were daunting. We were up against the big life insurers and the banks. It was in those days that he himself actually managed our equity fund, and Mimi, our co-CIO, managed our gilt fund. And Mimi likes to remind us that he managed to win 5 Raging Bulls during those years, and consecutive Raging Bulls. And this time led to us becoming a recognized name in both the institutional and advisory markets. And then in 1998, we strengthened our international footprint with the acquisition of Guinness Flight Hambro. That's where John Stopford and Philip Saunders, who you know well, come from. And that was the catalyst for us to open up offices in Hong Kong, New York, London, and Guernsey. And just an indication of the size and what 91 has become. And that's with the support of all of you over the last 35 years. Our assets under management, we are 3.6 trillion, and that's equivalent to the size pretty much of the unit trust industry in South Africa. We continue to invest in people. We've got 263 analysts and portfolio managers around the world. That's from New York to London, South Africa, and across Asia. About a third of them sit in South Africa. Our partnership with Sanlam was concluded about 2 weeks ago. What that means is doesn't change anything about who we are, independent and client-centric. But what it does change is those portfolio managers are now part of 91. It's not the marketing, the operations, or anything else. It's the portfolio managers and analysts that have joined us. As part of the rationale, just a reminder that Sanlam is strengthening its local and offshore product offering by appointing 91 as the primary active manager for its single managed assets. And they will, for that, take a position of 12.5% in 91, a long-term partnership and commitment to South Africa as well. Now, if we shift to returns and we look over the last 1 and 5 years, you could quite easily forget about the challenges that we faced, wondering where growth would come from. But what these numbers do hide, and I'm sure Clyde will touch on it, is how concentrated the markets have been. The good news is that the outlook seems far more balanced, and with that, hopefully, the return set and where the returns will come from should broaden. From an industry flow perspective, 2023 and 2024 were incredibly challenging years. We saw both net outflows in those years from the unit trust industry, and that's the first time since ASISA actually started reporting that you saw 2 negative years of outflows. And 2025 looked set for another negative year, but halfway through last year, that turned around. That number doesn't show is that at least 2/3 of those flows actually went into income, low risk solutions. So still not yet that confidence back in the market. The other trend that we often talk about is the money heading offshore. And last year was another year, 160 billion rand heading offshore last year. And that's the third largest year. That's through people using their offshore allowances or applying to take money offshore. 160 billion rand. So as we set out and start 2026, I think the challenge is really about separating the signals from the noise. And there's a lot of noise out there. For us, it's about staying true to who we are, fundamental investors, making sure that we're disciplined, making sure that we are focusing on what's real and not just what's loud, because there's a lot of loud stuff out there, and making sure that we look forward and not backwards. And Mark Carney said this brilliantly at Davos this year. He said the old order is not coming back. Nostalgia is not a strategy. And for years, us as investors, we become very used to zero rates and endless liquidity, and a world where diversification didn't really matter. You held growth assets and everything went up. That world is gone. There is a proper regime shift that's happened. The price of money has changed. The price of risk has changed. And that's why we think active management matters more now than it has in the past. Returns won't be delivered by this rising tide lifts all boats. You're going to have to earn them. So, would love a crystal ball as to where those returns are going to come from. The past, it's been driven by US equities, where performance has been significant. And you all would have read a lot about the flood of money that's gone into passive funds as a result. Now, we as an active manager, we don't say no to passive. We think active and passive should work together. But with market concentration at unprecedented levels, we think that it's active's time to shine. Our global team puts together their forecasts, and the full report can actually be found on our website. I've just pulled out a few things here. And the takeouts, these are the 10 years, the green bars are the 10 years looking forward. And there's two things that stick out to you. The returns across the board are much lower, particularly so in the US. But the positive is that the non-US markets look far more competitive than they have in the past. And this suggests a shift towards greater diversification, more selective exposures, and active management where you can change when things change. And we're already seeing this in our global business with a huge increase in the amount of emerging market equity and bond mandates that we're pitching for. So this rebalancing of portfolios for global investors has already begun. A very busy slide, but I just want to pull one or two things out. The first thing is around the changes not only happening in markets, changes happening in investor behaviors, and you all as advisors probably feel this. We continue to evolve what we do and challenge how we offer our products to you to stay relevant for you and your clients. And then one more thing, we're looking at ways we can make some of our more institutional products available to you as advisors. We've got an 18-year track record on private credit, and we're thinking of ways that we can access that. AI will continue to play a crucial role. Don't roll your eyes at me because you've heard so much about AI. I just want to encourage you to experiment, not by creating a little caricature of yourself and then posting it on a social media, but really experiment with it in your businesses. And we're here to help. Make sure you engage with us, whether it's on AI or whether it's on the markets or anything else where we can help you in your practices. I again want to just thank you for attending today's Taking Stock. but also to thank you for the support and the relationships and friendships that we've built over the last 35 years. 91 today is here because of the support that all of you have provided us. So a big, big thank you. Ladies and gentlemen, please welcome Hendrik de Tooy, our founder and CEO, to the stage with Bronwyn Nelson. Thank you.